How's it going, George? Can you hear me?
Good morning, good afternoon, good evening. I can.
Good to
Hello,
hear. Good
everyone.
to
My
hear.
name is George Kushner. I am the Chief Business Officer with Toyow. Robert, can you hear me okay?
Yeah,
Awesome. Today, super excited. We are going to be discussing institutional capital in tokenized real estate and private credit. I am super pumped to introduce the managing partner of Nimbus Capital, Mr. Robert Baker. And today's session is going to be discussing why institutional such as Nimbus are actively betting on tokenized assets, especially in real estate, private credit. And we'll also cover how they evaluate deals, they assess them, on-chain risk, as well as why Toyow's partnership matters and is so important to them. So with that being said, Robert, welcome to the show.
thank you. Appreciate it. Thank you for having me.
And we'd love to get started here because we have 60 minutes goes really quick. We know that. So
Yeah,
let's kick it off. Tell us a little bit about yourself and tell us how Nimbus got started and what Nimbus is all about, please.
absolutely. Well, thank you for having me, George. It's a pleasure to be here. My name is Robert Baker. Actively looking at opportunities across the globe. I would start off with that. A little bit about myself. Originally born and raised in Panama City, Panama, a small country in Latin America. Although it gave me the wings to really expand my horizons and travel to the U.S., where I was predominantly over a decade learning about the capital markets, learning a lot about the fund space, and really having an active kind of knack for creative and innovative ways to fund opportunities. Um, about 2 years ago, decided to move back to Panama from the US and decided to join a boutique conglomerate group called On Capital. It's an asset manager that has over $1.3 billion in assets under management, mainly from family offices, high net worths, and institutions. And in partnering with the funders of On, we decided to create Nimbus Capital, right? Where it has a very strategic focus in investing into underserved and overlooked opportunities across the globe. Our primary focus has been more in the traditional capital markets, so looking at publicly trading companies across North America, Europe, Southeast Asia, and Australia, as well as other parts of kind of the Middle East, depending on the opportunities. And I would say that as of the last year and a half, we've really taken a closer look at crypto opportunities, specifically those that have blockchain technologies, have some type of AI component to them, anything that has to do obviously with RWAs, which is coming more and more significant, and specifically tokenized assets, right? So primarily looking to invest into these companies that have already reached TGE, or their token generation event, providing flexible and innovative investment structures into these opportunities, and then also considering opportunities where these companies are looking to really secure additional capital and really strengthen that go-to-market strategy in having additional capital allocated to them, which was the case here with Toyo, right? Where we had a great conversation with the management team, and well, the rest is history. So, not to dive in too deeply, but that's a little bit about who we are, why the interest, and again, thank you for having us here today.
Awesome intro. Thank you very much. And I think I love the notion of going after kind of, either undervalued assets or untapped areas, underserved areas, because, that's where this holy grail notion of alpha, that's where we're able to capture that and get into marketplaces that maybe others aren't concentrating too much. So very, very interesting.
That's
So
right.
great. Talk to us a little bit about how Nimbus's approach to new opportunities, such as digital assets and tokenization, because I like to say, and maybe this is a little bit aggressive, but a lot of the TradFi world, I spent a very, very long time on Wall Street, and a lot of them have been sleeping on the space. But kudos to you and Nimbus, kind of see, the Gretzky effect, seeing where the puck was going as opposed to waiting to come to you. And what kind of was the catalyst there?
Yeah, I love the sports analogy. Not a huge hockey fan, but definitely love sports overall. I would say that it's a little bit, I would say that we saw a lot of resistance from traditional finance, right?
How about Messi? Do we know Messi maybe in Panama? I know he's not Panamanian.
As well.
Yeah.
We definitely do know him. One of the biggest soccer players ever. Now in the U.S., funny enough. But anyways, the point is that we've seen a lot of resistance from the traditional capital markets, traditional finance, and even in myself and in past experiences working at different funds, the crypto has always been looked at, this very scary, uncertain industry where there's been a lot of scammers, there's been a lot of people that have lost money, there's a lot of been people that have invested into Bitcoin at their all-time highs, and then it drastically comes down. And I think it's just about being more understanding of what specifically you're getting into, and not just investing into whatever is the hot, sexy industry at the moment, like for instance AI is. And I'm sure there's going to be a lot of risky investments within AI. But the point is, with regards to digital assets and tokenization, we realize that the same way that in public equities there are listed securities in which you can invest into and help companies grow and scale over time, same way where a company is looking to, instead of issuing shares through an IPO or a reverse merger or a direct listing, their companies are looking to issue tokens to those individuals that see the value in the business, and doing it everything under a centralized exchange where, a kid in Malaysia and, a grandma in Sydney, Australia can all invest into that same digital asset, right? It doesn't matter what time in their day it is, because it's a 24/7 traded security. And that to us was very attractive, right? Whenever you're looking at traditional finance, you have your specific hours within that specific exchange, whether that be on NASDAQ or whether that be the, Malaysian stock exchange, the KLSC. So it just kind of opened our eyes that, there's so much more capital out there, and there's so much more opportunity that, we take what the market's giving us. And the market is clearly signaling that crypto is the way to go. And even a layer deeper than that is, just your overall views on the blockchain and on Bitcoin. And we see ourselves being big on Bitcoin. We believe that will be the digital currency of the future. It should be a digital reserve as of today, as Trump is speaking about. So it's all these different components that just opened our eyes to realize, hey, this is the new way that finance is moving to. And the traditional finance will soon not exist and just be called the old finance, and the new traditional finance will be everything that involves digital assets, tokenizations, blockchain, et cetera, et cetera.
You touched on several things, but one thing that literally we had a Twitter Spaces yesterday, and I was mentioning the fact, which is crazy because this is 2025, not 1825, but the notion that here in the United States, taking that as an example, the public equity markets, for the most part, are relegated to Monday through Friday from 9:30 in the morning till 4. Of course, you have extended trading hours, but liquidity dies off. But the notion of having 24/7, 365 live price discovery of all kind of assets, whether illiquid, which is game changing, we can touch on that, or the liquid assets, again, it's just astonishing to me that, again, here we are in 2025, and this is just now coming into the fray. So I agree 100% with you. So let's start getting down into a little bit of the nitty gritty here and start talking about identifying the right deals. And if we look at that, so when you guys are evaluating new opportunities, whether it's tokenized assets such as real estate, private credit, or really any other category, because we all know all assets are going to be soon coming online and coming on chain, what are some of the top factors that you and the Nimbus team are looking for before you invest?
Great question. And I think you touched upon the most critical one, which is liquidity. That to us is, paramount in investing into assets that specifically are actively trading on different exchanges that are centralized exchanges that anybody can access at any point in time. That to us is probably one of the most important factors, right? Because there's, anybody can create a token and can list it on even their own exchange. That obviously doesn't add the right value, or it's much more of a risky transaction. So what we like is companies that are trading on these tier 2, tier 1 exchanges that obviously is a very important layer, which is, in the due diligence that we did with Toyow and with other companies in the crypto realm, we make sure that they're going to be trading on centralized exchanges where there's going to be an active interest from the market, from the retail investors that are looking for buying and the selling, and making sure that, hey, if I'm a token holder of this company and I have, X number of tokens, that I can potentially, make a return in the future and exit it out, versus maybe if we look at more the traditional world where, hey, more on the private equity side, we buy shares of a company, there really isn't an exit strategy there until, whenever they do another raise, or potentially once they go through an IPO, or, they take it public. But what is very interesting to us is the liquidity parameter. That's probably one of the main ones. Obviously for Toyow, the reason why we considered the investment was subject to that TGE event, which then makes us more open to consider these opportunities early on. And the others, I would say that it has to do with, the company's business model. We're always looking for companies that are actively generating attractive revenues, that have positive EBITDA margins. And then lastly, the management team. The management team is really the backbone of a company, right? It's the motor of that car. And we always make sure that whoever we're jumping in business with, that we're able to meet them in person, that we have a real kind of back and forth with them, that when things get tricky and difficult, do they stay in and do they discuss it, or do they hide and run away, right? And one thing we've loved about Toyow is that whenever there's been kind of an issue or, a disagreement, we all come to the table, we discuss it like adults, and we come to a solution. That to us, I would say, is probably one of the paramount factors as well, because, you can't do things if there's nobody willing to come to the table to meet you halfway or to have a discussion with you.
I think that, it's interesting, as I mentioned, I spent a long time working on Wall Street, and one of the most really undervalued, underappreciated, because we all try and think we're so sophisticated and so smart, but one of the things that's so undervalued, underappreciated is this L word, which is liquidity. And the thing about liquidity is you never really care about it until you do. And when you do, guess what? It's too bad. It's too late. And 2008 was a great example. There were a lot of credit-worthy companies that were okay. The problem is their liquidity got chopped off. And Bear Stearns is a great example, because I used to be in that business of funding companies like those, whether it's overnight repo or short-term commercial paper or term debt. They just all got caught in a credit trap. And so your whole thing about liquidity and honing in on that is, as an investor, that is absolutely, literally the holy grail. And without liquidity, no matter how much, quote, alpha, no matter how much return you get, if you can't get out of that, it doesn't matter. It's irrelevant. So vitally important.
That's right.
So when you guys are looking for, when you all are looking at your investments, and I don't know if you have anything maybe benchmark for tokenized assets as far as returns go, or are you looking at on-chain opportunities against maybe traditional, call it TradFi-ish investments? But love to hear a little bit about that.
Yeah, great question, George. And this is probably one of the main things that when we started our strategy for Nimbus Capital was paramount to understand that, hey, if we're going to be taking more of a risk in these kind of unknown asset classes, we have to make sure that we are generating the right return, specifically the risk-adjusted returns for these investments, right? So specifically from Nimbus' standpoint, we are very much on the structured equity side of investments. So generally looking to target, I would say, mid-teens to higher returns, close to maybe 20% on a yearly basis, which includes all portfolio companies that we invest into. And we had to take that same kind of approach to tokenized assets, right? To, other on-chain opportunities. So that's kind of been the overall look. And given that, we're not the traditional vanilla equity investor, we typically like to get a little bit more complex. We like to structure things in different manners. We like to be creative and involve all types of kind of, complex instruments to be able to hedge kind of on the downside and participate on the equity upside when things go well. And that we took that kind of same DNA, that same model of investment, and really applied it to these opportunities, right? Specifically to digital assets, tokenized assets, anything that has to do with companies trading on these tier 2, tier 1 exchanges in which they're offering tokens. And it's, I wouldn't say it's easy. I would say, if anything, it can be a bit more difficult given the high levels of volatility that we experience with these token issuers, right? And some of them, they're quite stable and they do quite well and they grow slowly, like maybe a publicly trading company. But in other cases, you have these massive swings where, our positions can be completely uncovered and it's pretty risky. But on the flip side, if we have, derivative instruments in the form of, options or warrants, it can be also very attractive and lucrative. So it's a whole game, if you will. And we always try to just make sure that we're always, like I said, protecting that downside by putting the right kind of risk mitigants into the transaction as we're structuring in order to get to those kind of returns that we typically see on the public equities. Hope that answered the question.
Yeah, no, it did. And I think that in all fairness, that it would be quasi difficult for a fund like yours to have a quote benchmark return index. And because the reality is a couple of things. One is, even though we're year 16 in, since Bitcoin, and I don't really think any potential or particular benchmark or indice has set itself as kind of the benchmark, like back in my day with bonds, the Lehman Ag, which became the Barclays Ag, which is now I think the Bloomberg Ag. I know the S&P has a broad digital market index, but that's not really a fair, benchmark for you guys, again, because of your profile. I think having this mid-teen to 20s, again, that makes more sense for your business, predicated on the amount of risk that you're taking and what you're doing. So I totally understand that as well. Excellent. All right, so we're moving on to kind of managing risk and compliance. And with that, why don't we speak a few minutes about the biggest on-chain risk that you guys consider before deploying capital, and how do you try and manage it? How do you mitigate it?
Yeah, great question. I would say there's always risk. I think that's the lay of the land in which we're in. There's always risk in any investment that you look at. Specifically, there could be smart contract bugs or custody issues or even liquidity, right? It can dry up. There could be a rug pull. There could be, hacking taking place. There's tons of different things that we're getting used to or we're getting acquainted with. Risks that we didn't even know that existed on kind of the on-chain side of things. So, it's always adapting, being creative with how we can mitigate them. I would say, the due diligence aspect is paramount. Really getting into under the hood of the company, understanding, again, the financials, understanding who are the backers, what's been their prior experience, have they led companies in the past. This to us is very important. And then, the business itself, how, what's its track record, what's their reputation in the market, how are the people, the employees, part of the team, how do they feel about the company? We don't only speak to the sole manager and decision maker. We like to tap into the relationships of the company and see how they've operated, how they, like I said, how are they when things get tricky and difficult. That really tells you the real story behind the company, right? Do they stay in and do they speak with you, or do they back out and always come up with excuses? Now, tokenization, doesn't really change, I would say, the fundamentals, if you will. It just adds kind of a layer of technology that we need and that we trust. And that's why I'm such a fan of kind of the blockchain. That's why us as a fund for Nimbus, we've even, looked at more crypto and blockchain opportunities on a higher level than even the traditional public equities, right? I would say that we were more on the 70-30 on public equities, and now I would say that we're closer to maybe 60-40 on the blockchain space, just because it's just a very safe and transparent market, if you will, that everything is verifiable. Every transaction that is made, you can check it out. It just also takes away kind of that third party risk in potentially banks or higher fees being involved. So yeah, there's a lot of good things and bad things out of it. But overall, I would say that there's more positives than negatives. And if you really get into the nitty gritty, understand kind of the company and how it works and what the people have to say about it, it really gives you kind of the tell whether this would be a good investment or not, and the risks that lie within it. It's almost basically what I'm getting at, George, is there's a gut feeling to it. And usually my gut feeling's been pretty good. So I'm glad about that.
Well, likewise, we're glad to hear that as well. I think that, if you think about because blockchain and Web3, again, 16 years old, but by the same token, it's still so incredibly new. And I think there are a lot of kinks that will be worked out over time. But make no mistake about it. If we juxtapose this with the TradFi market, it is far from impervious or infallible of having risk, of having sponsor risk. I mean, when you fund a deal, how do you know the guy's not going to run off to Tahiti or wherever? You never find him again. And it's not just isolated. I think that we have a very, very wide technology risk margin today because it's so clunky and a lot of people just don't understand it. And it makes the nefarious people slightly more easy to do their jobs, but that's compressing every single day. And I think as more and more people get into the space and you have really smart technicians and financiers come in here, that is going to be minimized. Will it ever be eradicated? No. Well, guess what? TradFi, the banks are, their employees are ripping them off every single day as well and getting caught. And so there is no really impenetrable perfect thing. But to your point, at least with blockchain, and this is what I love about the space. If you look at some of the key characteristics that set blockchain apart from TradFi, from a transaction standpoint, we talk about the decentralization. We don't have to worry about any government, or intermediary to go to them like our bank or brokerage or custodian to find out information. It's lickety split fast for the most part. It's immutable. Records cannot be changed. It's permissionless, going back to the no God or government. It's pseudonymous and it's secure. So again, it's nice to know as an investor that if you're transacting on that blockchain, you can pinpoint and see exactly where those funds are going and what's going on. In the TradFi world, once you send that wire or stroke that check or what have you, you have no clue what's going on. But yeah, that's exactly right. So this is a game changer. And I think that, again, I get so excited because what my next question is going to speak to you about, I think this is the true catalyst. I don't want to nip it up at the bud. Maybe I should shut up and let you talk about it. But this is very exciting. So let me, before I give it away. So with that is a little bit of a setup. How important is regulatory clarity around the world for you guys and other institutional investors? Because I would think that you have a peer group and you speak to other firms that do similar things to you. But when it comes to getting into blockchain, real world asset tokenization, regardless of the underlying, you're in Panama, we presume that Nimbus does business all around the world. How important is this governmental regulatory clarity globally to you guys?
Yeah, I would say it's absolutely critical. Institutions aren't moving billions of dollars into gray areas, right? They want to make sure that wherever they're moving that capital, right, it's in safe areas where they've been able to verify that their capital is not going to disappear at a blink of a moment, right? So we're very happy about how the globe really is moving towards this more digital arena, if you will. Obviously, the U.S. leading the charge, Trump being pro crypto and really making sure that it makes even the traditional mom and pop shops and even I would say baby boomers, if you will, feel more comfortable with crypto, right? And maybe you're not comfortable investing into Bitcoin, but now there's a Bitcoin ETF, right, which makes sure it stays under your brokerage account and you feel a little bit more calm about the fact that you're not investing into a digital token or or a digital asset that you don't know where it's coming from, right? I would say that the older generation has a harder time grasping the reality or how it's worth, right? The same way I would say even a generation below, getting used to the internet and seeing the capabilities the internet has. Now we're entering into this crypto blockchain infrastructure where it's paramount to have regulatory clarity, to understand how things are moving, and it just makes it a safer world for everybody, right? You can make sure, like you said, you pinpoint exactly where that transfer went, to who is the user of that wallet. It requires that KYC, that KYB necessity. And that's something that, again, is one of the reasons why we wanted to back a platform like Toyow, is because it prioritizes, right? Being ahead of the curve, if you will, on compliance, making sure that it's not an option, but more so a necessity to have, right? And with everything, right? The more regulations you have, the more it becomes easier for an institution, a fund, a retail investor to participate, right? The barrier of entry, the easier it is, the more it's going to be adopted, the more it's going to feel comfortable. And really the ones that have most to lose are the ones that, present the most resistance, right? To say, no, we have to remain with the US dollar as the main Federal Reserve, or, I don't trust crypto because I saw this other hack that took place, or I saw this other scam that happened. And yeah, there's going to be negative things, there's going to be bad things that happen, but such is life, right? It happens in all areas of our world. So I would say that overall, it's a necessity to have that regulation, and I'm very happy that it's becoming easier and easier for all types of investors to participate, whatever the level you may be.
Agreed, 100% agreed. I think that I've always thought that the real governor on institutional adoption to the space, especially in the US, and when it comes to public money, they don't have the luxury to take the chance on if something is or is not legal. And I think that, a couple of things from an entrepreneur standpoint, at least in the US, prior in the past administration, the notion was to, call people in to learn about projects, and they would go back to their offices the next week. And next thing you know, they would get a Wells notice from the SEC. And that totally snuffs out and stamps out innovation, entrepreneurism, and growth. And so that was clearly a major deterrent for a lot of people that wanted to either interact in the United States or already here, or from offshore trying to sell into the United States. And I felt like that once this regulatory clarity started coming into the fray, that things would change dramatically. And I know here in the US, obviously, we have passed the Genius Act, which is finalized the stablecoin legislation and who's going to govern and how that works, and the reserves. And now we're halfway through the Clarity Act, where we still need the Senate to approve it after Congress did. And I think that once that happens, you're going to see an absolute, whether it's a J curve, whether it's a hockey stick, whatever you want to call it, this exponential uptick in institutional adoption. And there's zero doubt in my mind that in the next, you name it, 36 odd months plus or minus, that all types of Web3 assets, and typically digital assets, are going to be on the balance sheets of not only every government around the world. I used to sell them bonds and derivatives. They're also going to have digital assets on the balance sheet. But also we're starting to see a proliferation of corporate America and corporate world. They're adding digital assets to their balance sheet. And again, this regulatory clarity makes it feel, okay, it's safe now. We've been looking at this stuff. We've been vetting this stuff. We've been researching it. Now's go time. And that's great from the buyer side. But then I also think from an issuer side, that's the side that I'm almost most excited about, because again, 99% of the world is still sleeping on this stuff from an issuer. They either don't understand it or are waiting on the clarity. And here we are. And I'm sure you're having all types of conversations with people that are really now speeding up their process of getting into the game. So super excited there.
Yeah.
We're going to move into partnerships and ecosystems. And I know we've touched on a lot of things speaking about Toyow, and thank you for the kind comments. But the next question is with regards to Nimbus and assessing Toyo, what made that kind of an interesting partner and an interesting investment opportunity from you all's vantage point?
Yeah. Well, I think this is the basis of the relationship here and of the interview. So thank you for that. Listen, I mean, from the very beginning, we were impressed by the management team. Like I said, that always is kind of the first interesting factor that we take in our conversations with Surajit, with Xerxes, and the rest of the guys and girls, which I will be coming over to Dubai in about a month to have kind of that official in-person meeting to almost kind of give the last check mark on the due diligence side. So very, very happy about that. But specifically with regards to Toyo, and I would say it's not just that it stood out because it looks at one area. What we're really like is that it almost has an infrastructure that can handle real estate to credit to art and even things like film and collectibles. I would say it's like the Swiss Army knife in the tokenization RWA space that is very attractive. And we don't see too many platforms that can offer this many, these multiple asset classes. So from the get-go, that to us was very interesting. And then as of recent, right, obviously the huge news that you guys posted with Nisus, if I didn't misspell it, but the $500 million deal in real estate. I mean, that's huge. That's exactly what we're looking for, right? We see ourselves as being a complement to Toyo's overall financing strategy, but not the mere solution, right? We're here for the ride, but the star is Toyo. And if we can provide flexible capital to them and assist by, allowing the company to sign these massive deals, right? Even if it's an MOU, that shows kind of the credibility, the presence, the reach that Toyo can have. And this is just the beginning, and this is all before even the TGE. So, in a nutshell, we're stoked, as they say in Southern California. We're very happy about this opportunity, and we're here to stay.
Well, look, those were awfully kind words. I appreciate that. I think that one of the things that really attracted me to the firm is kind of what you mentioned. I think that and I might have to steal this. We like to call ourselves the Amazon for real world asset tokenization marketplaces, because we're not single threaded. We're not just doing one. We're doing all the different assets that you mentioned. You said Swiss Army knife. I like that as well. So we might have to leverage that. But I think that not only is the platform very impressive with all the different assets that will be underneath it. You mentioned the huge $500 million real estate, and again, that's just getting started. That's just getting started, that $500 million deal. But I think we've assembled truly a world-class team, and super proud of it. I like our geographical dispersion and to leverage contacts and meetings and meet with folks. So I think that's very, very powerful. And again, just kind of dovetailing off that just a minute. When you look at the actual Toyo token, clearly that's something that you guys are investing in. I know we spoke about, you look at things like management and liquidity and other things, and maybe this is a little bit repetitive, but if there's anything that we didn't miss out on the actual token itself, would love to hear a perspective on that as well.
Yeah, absolutely. I mean, we saw Toyo again as not just another RWA platform or real world asset platform. We like that Toyo combines the usability, the friendliness of it, the strong tech behind it, the regulatory focus, right? That most of the competitors that we've seen or other companies that we've seen in the similar space don't really have, right? That to us is huge when we're looking and considering at opportunities. And, for us, really the 10 million capital commitment that we're making, subject to that TGE and subject to the TTN token going live, is not just a bet, I would say, on their business, but on the broader thesis of tokenization and how it's reshaping kind of the capital markets, right? Again, it shows the strength that we're a fund that is adapting to the market and clearly seeing that there could be and there will be more value in these tokenized issuers. And we're happy, we're proud to, to be aligned with a company like Toyow, where, you're pushing the industry, as a frontier, and we're only thankful to be a part of this journey, right? So if anything, we thank you for considering us as an investor and to participate in the token for Toyow, the TTN token.
Well, that's super, super flattering, and we appreciate that. And again, it's all we look at as a partnership, and I think this is going to be a great one. And thank you for the kind words. I think the other thing about Toyow that I really enjoy is, one of the biggest drags on Web3 collectively is the UI UX. It's very, very difficult for non-native Web3 people, and they get into it. And that's one of the biggest deterrents when they look at it. It's too much. I think that we went out of our way to create a simplified, Web 2-ish that can bridge them into Web 3. That's easy, it's intuitive, it's simplified, and I think that's super, super important. So looking at platforms like Toyow, and if you have any type of advice for other platforms, how do they make themselves more attractive to institutional investors and funds such as Nimbus?
Yeah, that's an interesting question, because there's many factors involved. I would say compliance is one. I would say liquidity is another. I would say trust in conversations. Again, having a strong management team that you can understand, you can grow with, that you can be open to new, flexible ways of creating value. It's a conglomerate number of things that adds up to, what makes a platform like Toyow attractive to institutional funds. But I would say the main one is, at least it's for us, is liquidity, right? We understand that it will be an asset that will be trading on a centralized exchange, where you as a holder of the Toyow token will have access to great value. And if a company like Toyow continues to deliver on the milestones and achievements that it has set out as part of its growth plan, then the risk is, reduced severely, and there's a chance of having kind of that interesting appreciation in value over time, right? But that has to do with, the liquidity, how the company is doing and working with market makers and liquidity providers, bringing in different institutional groups and funds and partners to the story, right? Continue to signing other type of big MOU transactions, like, again, just to mention, I get the $500 million transaction with Nissus, right, in real estate. Maybe that can take place in other, asset classes as well, right? From film, which I know that's one that you guys are really excited about, as well as potentially art, which there's a huge world, for collectibles of art, right? And being an owner and having a stake that is liquid, going back to the liquidity aspect. So I would say that the main three things would be compliance, liquidity, and trust, right? Those are three things that a lot of institutional funds will focus on, just from kind of a bird's eye view, before then digging into the nitty gritty of the company, going under the hood and seeing kind of the financials, which obviously every financial institution will look at. But from a broad angle, I would say that those are very important.
You mentioned several assets, and again, I think for people listening, I don't know if anybody, or if we can all appreciate what is coming down the pipe with the L word. We keep talking about liquidity. You mentioned art, and imagine the owner of a Van Gogh or Monet or Picasso or any Rembrandt, any artist of that ilk, and let's just say you have a $100 million painting, and you're in a liquidity crunch, and the only way to get liquidity is to sell the entire painting. And God forbid people know you're in that liquidity crunch, because you're going to get a down bid, and that $100 million painting is not going to trade at $50 or $100 million. But what if you had, let's use $100 million to keep the math simple. You have a $100 million value painting. Sotheby's is going to be the custodian, or a bank or some other verified custodian. And once it's appraised at 100 million, you're now going to issue 100 million worth of $1 stable coins, if you will. And as the owner, you have that luxury to only sell 10 million of it or 5 million of it or whatever of it. And you also have that luxury to buy it back if you want. Now it's going to trade on an open market, might not be at par where you're going to sell 10 million and buy it back at 10 million, could be 8 million, could be 12 million. But the whole notion is unlocking that liquidity for owners of assets. And that's just one example. And then you might have precious metals, you have jewelry, you have music, you have commercial real estate, as we've spoken about many, many times. You know, today when a sponsor of a commercial real estate deal wants to get out, it's one of two options. They have to sell the property outright or recapitalize the whole property. You can't sell floors 47 through 52. You can't sell buildings 6 through 8. You have to sell the entire thing.
That's
this
right.
is going to be an absolute game changer to all types of, whether you want to call them originators, sponsors, asset owners, what have you. And that's just on one side. The other side of the equation is a lot of these markets, the retail investor, right? The Joes of the world like myself, we've been locked out of things like this. You have to have real heavy, thick, liquid institutional capital to be even involved.
Right.
But now you can join projects for $5, $10, $20. And again, it's just absolutely amazing. We are on the precipice. It's finally here. And I am just incredibly excited about the next, call it 18 to 36 months. It's going to be a heck of a ride. So we're down to 15 minutes, but we only have 2 questions. So I think we can sneak both of them in. And we kind of just touched on this just a little bit, but we didn't dive into it. So thinking about institutional adoption and institutional participation with regards to real world asset tokenization and investing, whether it's real estate, whether it's private credit, whether it's some of these assets that we spoke about, what does your crystal ball tell you it's looking like? Call it in the next 24, 36 odd months.
Yeah.
Maybe a little bit out from there.
I think, we're at this real inflection point where, in 2, 3, 4 years, we see institutional funds just being more comfortable and just allocating more capital to tokenized credit, to real estate, participating more and more into having companies, instead of going public via an IPO, considering going public via, a token issuance through a TGE event, right? I think that will be the gold standard now, if you will, as the world, the economy considers Bitcoin kind of their new reserve. Everything is just going to go down that digital path, if you will, everything that you can think of, right? And it's going to be an interesting world because, banks are still going to be an important part of the economy, of course, but, it just kind of provides more transparency. Things are just a little bit more clear from a transparency standpoint. And I think just the traditional, Joes, if you will, like you mentioned, will have real access to, investments that, again, before you weren't able to. You need to have big capital backing in order to get access to maybe a huge real estate play. But now you can be, a small kind of investor that maybe just, graduated from high school. You have a couple $100 in your savings account, or even in Bitcoin, if you will, and you see value in investing into kind of this real world asset of, this building on a real estate play where it's providing attractive returns. And, that is that in today's world, or in the 2 to 3 years from now, is a real example of something that can happen, right? I believe that as institutional funds, even the most conservative, which I would consider those to be kind of like maybe pension funds, would now consider in making investments into these opportunities, into these more quote unquote risky today, but in the future being more traditional, right? And, teachers, lawyers, firemen, policemen, in which they all have their pension funds, and the manager of those pension funds now being more open to considering, tokenized real estate, right? Private credit, companies where whatever is the Apple, the Amazon, the Google, the Tesla of now the crypto realm, for that to be considered traditional or normal, right? Or the Nvidias. And I could even see an idea of the same way a company can be dual listed on NASDAQ and on the LSE, for instance, maybe there's a way where they can also be actively trading on a centralized exchange, right? Like a Binance, for instance, where they have retail investors from traditional public equities, but also on the crypto tokenized side. So it's going to be an interesting world in the next few years. But definitely everything is moving more towards a digital frontier. And again, either you stand by and resist it, or you join kind of the river that's flowing down this path.
The other thing about the institutional investors typically, and I was in that world a long, long time, is that their time horizon is much longer than the retail investors. And with that longer time horizon, they have a much different perspective of volatility, meaning they can ride out a lot of the drawdowns, where retail typically might panic a little bit. And so I think certainly over time, the massive amount of vol that we see in today in digital assets, I think, again, it's never going away because that's just a part of the game, nor should it. But I think the compression of where volatility has been in digital assets will come down significantly. And I think real world assets, again, they inherently are going to be much, much, much less volatile than other digital assets. Why? Because they have real tangible assets behind it, whether it's this Monet, whether it's the building, whether it's a, Patek Philippe $5 million, whatever it is, right? There's something real and tangible behind it. Are you seeing, so clearly I would think that you have friends or peer groups that you speak with that are similar to Nimbus or other institutional allocators. Are you seeing where they're finally starting to, look at it, or now with the regulatory clarity beaming right here on the dawning of it, are they starting to pick up their interest in the space? And you think, again, that will just continue to flourish over the next 2-3 years?
Yeah. It's been, it's almost like speaking to a brick wall with some even friends and colleagues, because, they're so, going back to the roller coaster of how Bitcoin performs, right? And that's kind of they're pegging their state of mind as to how it performs. So whenever there's kind of that drop where, it comes down by 30, 40, 50%, there's that, you see, I told you this is not the safest investment. But then once it reaches again an all-time high, then they're a bit quiet and it's hard to find them. They're hidden in the bushes. So it's one of those things where the guys and girls that get it, it's an easy conversation to have. And those that show, resistance, it's, the market will just show them that they're being, resistant to what's clearly in front of them, which is that, everything from a digital aspect, specifically real world assets, you're just pegging a token or a digital asset to something that is real and something that is really backed, that is tangible, right? So it's interesting and it's funny because it should be very interesting, very easy to understand. But in some instances, again, like it's the traditional finance or, your grandfather, for instance, that, he does things in his own way. And even though there's an easier way to do it or a better way, some people are just stubborn and want to stay in their old ways. So I would say that it just depends on the psychology of each person and how open they are to change, because change is eye-opening to some, and others, they move with it.
And look, I think a lot of people, or at least in TradFi, so when I first started hearing a lot more and more about crypto and Bitcoin, it was around 2015. And my immediate response was, this stuff is a scam. It's a joke. Like, this is ridiculous. And I made that infamous comment to a colleague of mine working in Manhattan. And a few years later, I kept hearing more and more about it. So what did I do? I decided to jump down the rabbit hole and try and better understand what is blockchain, what is distributed ledger technology. I'm a finance guy. I'm not a technology guy. And I too had my aha moment. And I used to say this a lot, that education is key here, where people really need to, and you don't have to be an MIT PhD to understand blockchain to be involved by any stretch of the imagination. But the more I think about it, and I'll give you a quick analogy, I think education to a certain degree is a crutch. I mean, yes, people should always know what they're investing in. No doubt about that. Always know, do your research, do your homework. But I think the reality is, why people aren't partaking in digital assets or real world asset investing is, quote, they don't understand it. I got bad news for you. 99% of the world, we walk around on a day-to-day basis having no idea what we use and how it works. When you swipe your credit card, how many people can tell me about how MasterCard and Visa hook up to your bank on the back end and or the retailer, and interchange works on the back end? How many people can tell you about M1, M2, M3 money supply? How many people walking around with one of these in their hands, which is about 80% of the globe, our phones, can tell you how it works? How many people can tell us this thing we're speaking on right now, a computer, how it works? So and I can go on and on and on. So the reality is most people don't necessarily need to know the underlying why. What they need is to see mass and broad adoption. And here's the crazy thing. Today, even today, pretty much no one in the world owns digital assets. We're talking 5% of the globe, plus or minus 400 or 500 million out of 8 billion. But yet, when you look at the trajectory and the projections for the rest of this decade, at least, it's going to be many, many, many multiples. And we all know where it's going. And so for people listening, again, this is my personal opinion. If we go back to analogies, sports analogies, we're not in inning X or inning Y. We're at batting practice before the first pitch has even been thrown out. We're that early. 5 minutes left, Robert. This has been phenomenal. Here we go. The last question with 5 minutes. What signals should the market watch for indicating an institutional adoption is here and here to stay?
Good question. Good question for the final one. I would say scalability and regulation. I would say that, once you start seeing, I would say, major issuances from well-known institutions, right? Once you start to see JP Morgan, Goldman Sachs, once you start to see billions of dollars flowing through tokenized funds in secondary markets, you know that this isn't experimental anymore, right? At that point, tokenized finance won't be a conversation. It'll just be finance, right? And I think that's kind of the norm that we're moving into. And we're here for the ride, right? If you're anybody that is already adapting and utilizing, what the market's giving you and investing into tokenized assets, you have a leg, like you said, over 95% of the globe. So there's a lot of good opportunities here. There's a lot of money to be made. You just have to be smart. You got to do your due diligence, really look at companies, understand kind of their value proposition, make sure that everything is transparent and verifiable under the blockchain, and you'll do well, whether you're an institutional fund to regular Joe, right? That's what is so exciting about, the tokenization that we're moving into, is that it's accessible to everybody. As long as you have a couple dollars in your wallet, you can make a huge return by, again, doing the traditional due diligence that requires to make sure that whatever you're putting your capital into is going to make a good worth your while. So, it's an exciting space, and we're very happy to be a part of it and to be on the journey with you guys as well.
Well, likewise. And I think, again, you hit a couple nails on the head with the scalability and regulatory clarity. And you're looking at, TradFi. It's funny. I worked at BlackRock for a few years. And when I was there, crypto, digital assets, these were literally 4-letter words. Like it was an anathema, and it wasn't to be had. And I think, again, using my personal example, thinking it's a scam and joke, most people in TradFi, let's face it, we're pretty arrogant. We know everything about everything. But once you start learning and adapting, and that's why you see BlackRock that's done this major pivot. I love to pick on, Jamie Dimon at JP Morgan, and he still talks about it like it's, whatever he calls it, but yet JP Morgan is huge in blockchain. They have their own blockchain they're running things off of. And so the genie's out of the bottle. The genie is totally out of the bottle. It's not going back in. And like you mentioned, at the top of the conversation, with the new administration, at least in the US and partially leading the way globally, you now have all these people that have either been looking at it or thinking about it on the periphery that are now jumping in. And I think the scalability is a very interesting component, because that's how we're going to scale. When you get, to me, retail always led the charge and led everything with Web3. You're then going to see institutional adoption come in, but yet you still have 7.5 billion people that haven't touched this stuff. Then you're going to see the next wave of massive retail adoption. So it's still so incredibly early, so incredibly exciting. And Robert, this was absolutely fantastic. And we truly appreciate your time. We appreciate the partnership, the kind words you said about Toyow. And ladies and gentlemen, hope you enjoyed this. And again, Mr. Robert Baker with Nimbus Capital, managing partner. Thank you so much for your time.
Thank you so much, George. Send my hellos and my regards to the rest of the Toyow team. This has been an absolute pleasure. And I can't wait till our next conversation. So thank you again. Appreciate it.
Thoroughly enjoyed it. And safe travels to Dubai to meet the team.
Thank you. Thank you so much. Appreciate your time.
Take care.
We'll be in contact.
Thank you, everyone.
Thank you. Cheers.
Thank you.